What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be covering in this update video is we're going to be going over some of the changes in the short interest and utilization data that we've seen on Ortex today. I was getting a lot of questions about this today in the live stream. People were a little bit nervous about this. So we're going to go over exactly what this move means, how it happened, and what it means for AMC going forward. We also need to talk a little bit about the options data and what the max pain has changed to going into the end of this trading week. Now, there is some pretty big news that AMC has just released. They have announced acquisitions of new theaters. What they've been doing recently is they've been closing down theaters that were underperforming, buying, acquiring, and opening up new theaters in higher performing locations. Now, in addition to this, this move comes after a very interesting filing that AMC had released, and what they essentially have done has pushed off their debt payment by about a year for some of the payments that were due in 2022 of March. Now they are now due in March of 2023. Now, one of the first thoughts that came to my mind is, well, if AMC is going to be pushing off these debt payments into 2023, well, it frees up some capital in the short term to do acquisitions, just like we are seeing announced today. I didn't necessarily expect these acquisitions to be announced so quick, but that is a very, very good sign that AMC is moving quickly and swiftly and efficiently in expanding its business. Now, in addition to all of that, we have this really weird article that came out today from CITADEL's chief legal officer, where he's essentially trying to fight for transparency in the Treasury bond market. That's a very, very strange move coming out of CITADEL. So I'm going to go over exactly what my thoughts are on exactly why they're making these statements and what it means for the overall market moving forward. So before we get into all of that information, if you enjoy the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So when we're looking at the chart of AMC today, down 5.35%. I know that doesn't feel good, but at the end of the day, we really need to think about where we have come over the last couple of weeks. We were down on December 14th, almost sub 20, 27 as we're seeing right here. We rallied all the way back up over 30, and now we are sitting at about $20.60 in the after hours at the time that I'm recording this video. Guys, the apes are not leaving. The short interest data that we are seeing has not changed. It's actually gone more in the apes' favor. And when we think about what we have coming up in January in terms of that quarterly date, the cyclicality of how AMC moves, the options chain, and all of the other pieces of due diligence that are pointing to somewhat of a perfect storm coming for the ape community over the next couple of weeks potentially, in my opinion, there's really nothing to be all that worried about. If they want to short it right now, good, go for it. Jack up the short interest, increase the utilization, increase the cost to borrow, put more pressure on yourselves when it comes time to have that next run up. That is going to just benefit us over the long term. So when we come over to the actual Ortex data over here, let's just give this a quick refresh. We are seeing the utilization data at 79.24%. We are also seeing a decrease in the short interest today, according to Ortex's estimates. So 18.88% is the current estimate. We had 2.9 million shares returned today, 1.1 million borrowed. So it is slightly normal to see somewhat of a decrease in the estimated short interest after seeing some significant price movements to the upside. Yes, there are going to be some shorts that are covering some of their positions. Some of this may be coming from those institutions or even market makers who are hedging those puts that in order to hedge the puts that they sold for last week when we had a lot of those put contracts running in the money. Remember, in order to hedge those puts, you need to go out in the open market and short. Well, that can artificially pump up those short interest numbers slightly going into that expiration date and in the days following. So that is one explanation as to why we are seeing a slight decrease in the estimated short interest. But at the end of the day, the shorts that we are looking at to cover have not covered. We are still seeing the days to cover at about 2.35 days, which is a very bullish sign in terms of thinking about how long it's going to take these shorts to get out of their position if they really needed to. And again, when we come over to the option chain right here, this January expiration date added about 20,000 contracts out of the money on this date. And it's already looking pretty nasty. We have 116,000 contracts in the money, 433,000 contracts out of the money. If we start to see any aggressive price movement to the upside, the buying volume that's going to come in is going to be very, very significant. Now, coming over to the Max Pain data, we are now seeing the Max Pain at $29 a share. So that is going to be something that we need to look out for going into the last trading day of this week. Now, coming over and analyzing AMC's new acquisition, well, coming over to this press release right here, AMC Theaters continues its strategic theater acquisitions, announces the acquisition and reopening of former Pacific Northridge Fashion Center 10 in Northridge, California, and former ArcLight Chicago 14. So we can see here that they've opened this. AMC remains in active discussions with other property owners regarding additional currently closed locations. So these acquisitions right here are just the start. We've seen AMC do this in the past, and what their corporate strategy and business level strategy is essentially right now is they're trying to close down their underperforming theaters and open theaters in locations that have typically been high performing. This is a very efficient way to increase the amount of revenue that they are able to generate. And coming off of Spider-Man this weekend and The Matrix coming out this week, they are set up for success. Now, we have a comment from Adam Aron here. Adam Aron, chairman and CEO of AMC, commented, "These theaters have previously been high-traffic, successful locations in two of AMC's top markets, and we are pleased to offer the AMC experience at them a few months from now in 2022. These are prime examples of how AMC is staying on offense, looking for opportunities to strengthen our company through the acquisition of these popular locations. Our most recent acquisitions of AMC, the Grove 14, and AMC Americana at Brand 18 are already showing their success as those locations routinely finish in the top 10 theaters in box office performance among more than 150 theaters in the LA market and in the top 30 in the entire United States. This shows us that AMC's strategy right now is working. Now, when we come over here to their new filing, this came out yesterday. We can see covenant suspension period means the period from and after the amendment number 7 effective date to and including the earlier of March 31st, 2023, the day the borrower has delivered a financial covenant election to the administrative agent, provided that yada, yada, yada. Essentially what this means is that AMC's debt payments that were coming due in 2022, some of them have now been pushed to 2023. This really does give AMC a decent amount of capital that they can work with now to further increase their acquisitions and really expand their business, which is only going to benefit us in the long run as AMC shareholders. Now, let's talk about this situation with Citadel and their supposed fight for more transparency. Now, when we come over to this article right here, the U.S. Treasury market needs to enter the modern age. The writer is Chief Legal Officer of Citadel Securities and former chair of the U.S. Commodity Futures Trading Commission, CFTC. Since its establishment in 1790, the U.S. Treasury market has fueled America's emergence as an economic superpower. Given its size and centrality to the global financial system, one would expect the U.S. Treasuries market to have a modern structure. Yet the reality is that it has failed to keep pace with other financial markets. Recent shocks to the Treasuries market, including the pandemic-driven volatility of March 2020, highlight the need for structural reform. A wholesale rewrite is not required, but a series of targeted changes could bring it more into the modern age. Here's where it starts to get a little interesting. First, we should implement robust public reporting of trades in U.S. Treasuries. Now, a firm like Citadel, a market maker, and their hedge fund side typically would not want something like this. The public to be able to see what these institutions are trading, especially in the bond market, one of the highest manipulated markets that we have. Public trade reporting is a key source of transparency and a hallmark of virtually every major market, including U.S. equities, which obviously needs a lot more transparency, options, futures, corporate bonds, municipal bonds, and many derivatives. It is remarkable that there is scant publicly available information on U.S. Treasury securities trades. While financial companies can afford to subscribe to private data feeds, even the best of these may capture only up to half of Treasury trades. As a result, the Treasury market operates with significantly impaired post-trade transparency. So here's essentially what I think they're doing here, because we really can only speculate as to what they're doing, because institutions like Citadel or any of these large institutions don't really want to show any other institutions, especially the public, what they are doing, because people may be able to figure out what their proprietary trading methods are. So here's really what I think they're going to do here and what their goal is. I think it has to do with margin and collateral requirements. So we have seen a lot of these collateral haircuts really come through over the last couple of months, especially from the DTCC on what is going to qualify as high quality collateral. A lot of these securities that are being posted as collateral are U.S. Treasuries. So if there is more public information available about these Treasuries, well, there might be a better way to use these Treasuries as collateral and kind of circumvent some of these margin requirements. The second is that when we're coming into the time of rate hikes, the value of these U.S. Treasuries is going to decrease. When yields go up, the actual principal amount of these Treasuries go down. When the yields go down, the actual amount, the principal amount of these Treasuries is going to go up. A lot of these institutions right now are going to be shorting U.S. Treasuries. If you make these trades public, you're going to be able to see basically what the interest is and what types of trades are being made on which specific Treasuries. But that is really all speculation. You can't really determine what Citadel is trying to do with these statements and trying to make the U.S. Treasury market more transparent. But again, at the same time, it is very strange that they're fighting for more transparency in this type of market. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next video.